Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Eric Hadik, CEO and President of InsideTrack.com and InsideTrackTrading.com. Welcome back to the show, Eric.
Oh, thanks for having me back, Jim.
Eric, bumpy ride in the equity markets, a couple of days up, and then a really sharp day down. Is this a pattern we're going to continue to see for some time?
I think so. I think that even with the constant, sometimes conflicting trade war rumors, things look like they're shaping up a little bit, then suddenly they're very negative, then there's just quiet, which allows the market to try and recoup. I think you're going to continue to see that. And that's been one of the things that has really begun to validate my overall cycle analysis, talking about seeing significant and similar highs in September of 2018 and then late April, early May of 2019, and that each of them would usher in time frames where things would start to turn more negative. We'd see a couple of months to the downside, and when we generated some weekly sell signals in late April, it began to confirm that those cycles. And so I still contend that we're going to see an initial 1 to 2 month drop from late April into late June, and daily cycles turned back down in May 21st, 22nd. So I think that we've got another down wave here into the end of the month. So there's a lot of indicators corroborating that I really couldn't explain in detail verbally, but one particular channel technique that I use turned down in early May, confirming an intermediate trend reversal. And what you normally see in an authentic trend is that the channel will turn down, the market will drop below it, and then the market will come back up and retest the lower end of that channel that's now heading downward. And that's exactly what almost every index did on May 16th and May 17th, and then triggered some selling to begin this week, and then on May 21st kind of confirmed that. So I think from there on we're going to see negative action in the equity markets.
As an investor, is this a good time to sell then and wait for this dip and come back?
I think that we are destined for some wide volatile trading range for a year or two. Now that's starting back in last year. I started discussing this scenario where I thought we would see these 1 to 3 month swings in each direction, but the market not really making any new headway, and by the same token not breaking below the floor of that trading range either. And that's really what we've seen even going back to January and February of 2018, when you saw your initial sharp sell-off. Then most of the indexes spent the next 3 to 6 months trying to head back up to the highs. A few of them spiked above their late January 2018 highs in August and September of last year. Some of those indexes stayed below those highs. Then they turned back down. and based on some monthly trend indicators that I have in late December, I explained why certain indexes and certain tech stocks should go back up and spike above the September-October highs, while many of the primary indexes, including the S&P and the Dow, would rally back up into April or early May and peak below their September-October highs. So even that indicator has reinforced that we're stuck in a wide, volatile trading range that I think is going to continue into the third quarter of this year.
We'll have more with Eric Hadik right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. We're speaking with Eric Hadik. Eric, what's your outlook on gold right now?
Gold has been in a constructive setup when it fulfilled the cycles we had talked about, I think, for many months, cycle highs in late February, early March. It projected about a 2-month correction. At the same time, silver, which was in a weaker structure, was projecting a drop back to its November lows. But from a price perspective, everything told me to look for gold to drop back below 1270, but that range from 1270 down to about 1256 was the ideal buying range to get back into long positions that had been exited in late February. And gold is doing that. It's just retesting those lows now, and I think that it's in the structure, and silver is attacking its November lows. So everything is set up for a new rally to begin to take hold, and that coincides too with the fact that the dollar just keeps bumping up against 3 to 6 month resistance, roughly in the 97.70 to 98.20 range in the dollar index. And it first started hitting that range back in November and December of last year, sold off from it, went back up to it in March, sold off a little, is back up against it again. And the dollar really seems to be finding a ceiling there, and I think that it could see some selling in June and July, which would probably also help gold, as much as that inverse correlation that works sometimes, doesn't work other times, but it's at least one additional factor that corroborates my outlook for gold in the coming weeks.
What about other precious metals like palladium and platinum?
Platinum has been in a weaker position, palladium much stronger. Platinum was in a structure where it was kind of like silver, needed to go back to its late 2018 or third quarter 2018 lows before I thought that it would find a bottom. And that's kind of indicative of where the metals are too. You have gold and to some extent palladium, although it's lost a little bit of that in recent months. But gold's the one that has led the rallies and gains the most during the upswings, and then silver and to a secondary extent platinum are the ones leading the downswings and dropping farther. And it's kind of those divergent highs and lows that also help you pinpoint these intermediate turning points. But it's a market that is slowly building an uptrend, but hasn't gone into that very defined and convincing uptrend where rising tide lifts all boats type of thing. I still think that that's more likely to wait till this trend is more mature. But I do think it's coming where you're going to see all of the metals moving up in tandem. But again, I'm looking out at a 6 to 12 month horizon there.
Copper, everybody says it's the great indicator of how the international economy is doing. How is it doing?
It has, back in March and April, it was fulfilling some, really the 3 to 6 month upside targets and running into some steep resistance right around $3. And that just told me that it needed to correct back towards its year opening lows. It's in the process of doing that from a economic indicator standpoint, like you're talking about. Certainly could be another thing that is just giving some warning signs, even to the equity market, showing that things aren't quite as robust and as positive as they've been perceived to be. But that doesn't mean that they're going to hell in handbasket either. It just means that some of these expectations probably got ahead of themselves. Even your interest rate discussions and movement have kind of shifted with that changing sentiment as well. And I think copper is consistent with that, showing that we're kind of in more of a limbo, not a robust expansion of any sort on the horizon.
We'll have more with Eric Hadik right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Eric Hadik. Oil has fallen out of the $60 a barrel range. Is that drop going to continue?
Yeah, I think that oil fulfilled many of the upside targets and multi-month cycles that came into play in late April, early May, and from a technical indicator standpoint, what I needed to see was the products, the unleaded gas and heating oil, go back up and retest their highs, even as crude rebounded to a lower high. All of that was just fulfilled on May 17th, and all those markets gave a nice reversal signal on the 20th and 21st, and I think that validates the cycles and portends some steeper selling on the horizon. It's intriguing to me that how in close lockstep energy and equity markets have traded over the last 18 months, and that was really highlighted again in late September, early October of last year, both of them peaking at almost exactly the same time, and then diving precipitously in the October through December time frame. Since then, for both market complexes, I've said the same thing, that we would see rebounds into late April, early May, and that would be the extent of their upswings for this 3 to 6 month cycle. So I think that energy markets do have some downside on the horizon. I think that more recently they've kind of been held up by some of the saber rattling and fears where Iran and the Middle East are concerned, and that'll continue to be a factor. But I think that has just kind of held them up, supported them, even as the cycles and various indicators are turning negative in this early May time frame. So I think that as that quiets down, each time you hear or don't hear much where that's concerned, that will give the oil markets the opportunity to sell off. Then you'll probably see some more saber rattling, and all of a sudden oil will bounce a bit, but it'll be kind of this stair step to the downside type of sequence. A bit like I was talking about with equity markets and the trade war, that you have many underlying forces wanting to push these markets lower from late April, probably out into maybe even as far as July, August of this year. But as those market forces are weighing on the market, you'll have your periodic times when those fundamental scares will, or the lack of scares where the equity market's concerned, will give some support to the market. Then the negative forces take back over, and that's really what makes a trend anyway.
Eric, thank you so much for chatting with us.
Thanks for having me back, Jim.
My guest has been Eric Hadik, CEO and President of InsideTrack.com and InsideTrackTrading.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. If you have any questions for Eric or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.